Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. Euro-dollar. A bearish black crow yesterday after the previous fourth bullish white soldier. Prices turned back below the March 2020 congestion and December 2023 high, now overhead at 111.39. A question I'd posed myself since the start of this week has been answered. How strong was the extension of the January to February 2021 head and shoulders neckline, which is currently at 111.77, highlighted in dark blue in my daily chart? Well, the answer is quite strong, as this capped the market without even being tested since Wednesday. Now, overall, prices are in between the purple middle time below, currently at 110.78, and the purple upper time above, currently 112.20. We nevertheless still have overhead target X2 at 111.90. This is the secondary hardest to reach target for the March to date double bottom pattern. The primary target at 110.90 was reached earlier this week. So far today, a small reactionary move higher, but still well within yesterday's range and under the March 2020 congestion and the December 2023 high. Cable, aka sterling against the US dollar. An indecisive doji cross yesterday after the previous session's fifth bullish white soldier. The top side was capped by the combination of December 2020 low at 131.33 and the July 2023 high at 131.43. The latter, I suspect, is a derivation of the former. However, it was still a new high not seen since July 2023. Underneath we have the dark blue middle time, currently at 130.66 of the bullish Andrews picture for the late June to early August move. So far today, a move higher, which was trapped by the dark blue middle time below and the December 2020 low and July 2023 high above. However, as I did not expect this to last, and we're reaching a cusp at the end of next week, and today the market is breaching up to new highs not seen since July 2023 by pushing up over the December 2020 low, but not as yet stabilizing over it. Euro sterling, a second bearish black crow yesterday and a strong move down below the medium moving average, currently at 85.06, the very recent 50% Fibonacci line at 85.03, and the lower trend line currently 84.79 of the early August to date acutely descending wedge pattern, though the market only closed below the first two. Below this 50% Fibonacci line, we have some clean air down towards the lesser Fibonacci line for the very same move, 84.74, and the April 2021 low 84.70, plus the short medium moving average currently 84.69, and the market took advantage of that fact. Further down, we have the April to July congestion zone between roughly the April 2021 low all the way down to the 2024 low in July at 83.81. But this zone is not specifically defined, so if prices do try lower, well, you may find some places with little or no support and others with a lot of support. And so far today, a further decline all the way down to that short medium moving average, testing it right now at this moment and outside of the descending wedge pattern, but obviously not stabilized as yet. US dollar against the Japanese yen. A bullish engulfing pattern yesterday, which wasn't that hard to do, even though I had problems saying it, as the previous session was an indecisive doji cross, though with quite a long tongue and tail, such that prices were still within the previous session's range. However, it also showed how the market was once again capped by the lesser Fibonacci line at 146.69 and supported by the next support below, which is the 50% Fibonacci line of the January 2023 to January 2024 move at 144.58. Below this 50% Fibonacci line, we have little in the way bar the untested lower time, currently at 142.74, of the December 2023 to early August 2024 bullish Andrews picture until the 2024 low at 141.62. So far today, a test lower, but mainly staying within yesterday's true range and looking like a hanging man pattern right now. US dollar against the CNH, the offshore Chinese yuan. A second bullish white soldier yesterday after the previous session's immediate countering bullish harami. The main base of yesterday's action was on the lesser Fibonacci line at 711.61, and overhead we have another lesser Fibonacci line at 716.95. In between, not much, bar what prices have generated this month. Further down we have the low of early August at 708.22, whilst above we have the combination of the May 2020 high and the 50% Fibonacci line of the July to August move, both at 716.95. All of this is in the shadow of last month's monthly key reversal down. Now, so far today, a dip lower, but within yesterday's range. US dollar against the Mexican peso. A bullish opening white Maribosa and third bullish white soldier yesterday, moving and closing above congestion at 1940.68, and also the bright red middle time currently at 1945.27 of the mid-May to mid-July bullish shift pitchfork. The rise was capped by the 2021 low at 1953.63, which had previously contributed to the capping of the big early August rise. In the overall picture, we remain within the bright red mid-May to mid-July bullish shift pitchfork, with congestion overhead at the April 2021 low at 1971.68 and at 1979.14 and 1987.56. Now meanwhile, below the middle time we have support at 1920.38 and the March 2020 low at 1915.03. I should also point out that the market has attempted to make a weekly key reversal up this week, but the low misses making it by a few ticks. So far today, a higher open, just under the 2021 low, but dipping below the bright red middle time, though not as yet down through the congestion at 1940.68. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.